Hello everyone and welcome to Investing Angles. Today we are doing educational video. We sensed a couple of strong moves by Netflix and from multiple perspectives, and today we are doing Elliott Wave analysis, but also with other instruments like candlesticks and some technical indicators. But overall focus is on the short and mid and the long-term, potentially long-term perspective for the Netflix moves. All right, before we begin, support us with your subscriptions and check our website investingangles.com for bigger and more information. All right, so let's begin. What we are having here. This is the Netflix candlestick map that we got at the end of December. So what were concerning? What were concerning? The first of all, I'd like to say that 6 and 12-month candles, so annuals and semi-annual, closed fairly bullish, and well, there were some technical stretches, but at this point, it is difficult to say anything about them. So it's most likely bullish. However, if we look at the smaller candles, like for example this 4 months frame here, it closed well. Technically, the candle is bullish if it is a standalone, but together we have 1, 2, 3, 4, 5, 8 candles in a row, or green ones, without any significant pullback. So from candlestick perspective, from candlestick theory perspective, this is an overstretch. 8 to 10 candles mean an imminent pullback. How far, how deep, we don't know yet, but what the theory says that this is going to be a substantial one. And just to emphasize this one, there's the last candle closed way above the Bollinger Bands, and this is a signal itself. So combining with candlesticks, this one is likely to be an important one. All right, so we just keep this in mind. If we have a look at the monthly frame, we can see that the months at the beginning it was fairly nice and everything, and it looked like it's gonna be a bullish candle, but unfortunately, bulls lost the momentum and gave up to bears, so the candle pushed back at the end of December and closed as a spinning top, potential spinning top. It could also be a gravestone doji. Well, depending on the view. The most important part that this candle closed above the Bollinger Band, and this is a concerning signal itself. So now the candle is very vulnerable to any decline in January. If January produces the red candle, well, it's going to be a reversal, and probably a big one. And just to emphasize the theory, we are seeing a very concerning move at the beginning of January. The first week of January, this is the weekly frame, it closes with a candle which technically confirms a reversal on a harami. We have the 1, 2, 3 harami candles, and now this one is a confirmation. It is still sitting on a support line, but the chances for it to move down are fairly high. Even after it can consolidate for a week or two, but again, I'd like to emphasize the move is down here. And if we look at the daily frame, it is equally concerning. So potentially we can have this like 3 black crows. They're somewhat unusual, but it is still a 3 black crows. They are overlapping ones. And the arrow here shows an 8 by 20 EMA bearish cross, daily bearish cross. They are quite rare, and the last one was in July, which led to quite a substantial pullback. So these candles are sensing something, and we don't know yet what kind of report Netflix will post, but well, candles, they are informative enough at this point to say that this is going to be probably a significant top. Well, that's all that we have from candles. Now let's move on to the Elliott Wave and see what is happening here. So based on some measurements, there is a chance that this huge impulsive wave that started in April 22nd, April 2022, pardon, it could be complete. If this is the case, if this hypothesis is correct, then from Elliott Wave perspective, we might have like 3 different options. This was either wave 1 of a bigger, higher degree, or wave 3, or wave 5. Like, there are no other options. Let's have a look at all of them from the best to the worst. So the best case scenario is wave 3 completed here. So in this case I'm putting it in green one. Wave 4 is likely to decline, and from Fibonacci perspective, it's 0.236 or 0.382 of the length of wave 3. So, and I put this rectangle here. So this is the chance for wave 4 to be here and reverse and continue the rally. So let's put the perspective arrows here. So this would be the 8 for wave 5. Okay, so and this is the green one, and this would be our wave 5 somewhere here. So we don't know yet, but that's the confirmation would be. All right, so but this is a very important moment. So this if this is wave 3, then this would be wave 2, and this must be wave 1. And from Elliott wave theory, we know that wave 4 must not overlap with wave 1. So in order to be eligible, it needs to stay above this level. So let's move it here. So this would be our 4 target. Well, it's still possible, everything, but wave 4 must not cross wave 1. If it does, it will be the first and strong signal. So this level is 799. Okay, let's put it in the middle, in the center, so we all know. So if this wave crosses 799, it means that we are dealing with something else and not wave 4. Not wave 4. It's still far away. It's still far away, so let's measure how much Netflix needs to drop. Well, that's significant. 20% still needs to go down in order to find support somewhere here and continue its rally. However, if it breaks, let's look at the different scenarios, right? So assuming that the wave 4 breaks and the impulse breaks here. In this case, we'll be looking at potential for wave 1. So this was a wave 1 of a bigger degree, and we know for wave 1s, they are typically retrace 0.5 to 0.618 of the length of the wave. In our case, it will be something like this. So this kind of wave, and I'll put it in the blue color. All right, so this would be our potential wave for wave 2. All right, so sometimes wave 2 can retrace up to 0.786 or even more even more of the length of wave 1. The only thing it cannot do, it cannot go below the beginning of wave 1. Otherwise, it will invalidate the impulse. All right, so this is the perspective for wave 2. But I would say I'm not considering this count until the wave stays above 799. All right, so and then the worst case scenario, this is the wave 5 of technically it probably the wave from the very beginning. This would be wave 5 and starting somewhere here in 2003. Well, it's still possible. It's still possible if we look at perspective. So it could be something like this. So this is wave 1, 2, this is wave 3, 4, and this is wave 5. This is a very reasonable possibility. All right, so in this case, wave 5, so technically it would be a cycle wave 1. Well, and the cycle wave 1 would also retrace about 50 to 62% of the length of wave wave 1, which is technically from the ground zero, from the beginning. In this case, I put the purple Fibonacci levels here, and we can have another rectangle here. So this would be the most typical rectangle in purple count, for the purple count. And let me change the color here. So this would be it. So this would be our target for wave 2. Well, I mean, I'd like to emphasize this is an ideal target because the wave could go all the way down here. But let us be reasonable at this moment and stay just in the most typical levels. And if we put another wave here, so this would be potentially the path for wave 2 in purple. All right, so wave 2 completes here, and then wave 3 starts, and it's going to be even more aggressive and more impactful than the wave 1. Okay, so this is the perspective from Elliott waves, and yeah, I'm putting here just to explain everything. So this is the typical zigzag shape. The most typical shape for wave 2 is considered a zigzag. However, a flat and or another formation is possible, like typically either flat or zigzag, or it could be even more complex wave which would last over a decade or something. Right, so this is the perspective, but the most important part that we are right now watching wave 4, which needs to find support at 700.99. Well, that's the perspective for Netflix, and well, again, we will be monitoring and see how it develops on the weekly frame. If the weekly frame continues to go down, which is right now very high probability, I would say 70 plus, then we might have a monthly impact, and in this case we'll have a domino effect, and Netflix might go down. Again, interesting to watch what Netflix officials are going to say in their next report. It looks like candles know something, and they are getting ready for this, and they are getting prepared, everyone who knows how to read them. All right, so that's all for today. Thank you very much for watching. Have a great day and happy trading, everyone.